Nobody still uses accounting methods from the 1950s, he declared, striding back and forth like an overindulged golden retriever. His words ricocheted around the glass-walled conference room, unwanted and relentless. I remained seated at the far end of the table, nursing a cup of weak coffee and silently tallying how many times he'd dropped the word disruption in a single meeting. 8 times, 9 if you counted the time he muttered it while adjusting his belt. His name was Travis, a 28-year-old Stanford graduate, freshly appointed as our CEO by a board so infatuated with youthful energy they mistook arrogance for vision. He arrived with a polished LinkedIn smile and a vision board cluttered with buzzwords, immediately replacing half the executive team with cryptocurrency enthusiasts and former fraternity brothers masquerading as philosophers. His first act? Cutting my operations control department in half, calling it right-sizing, insisting that algorithms and outsourced ledger bots could handle the work I'd spent a decade perfecting. I didn't argue. I just collected my layoff bingo card. Leaner, agile, cost-optimized, and returned to my desk to keep doing what I'd always done, keeping the books accurate. I'd been the operations controller for 6 years. Before that, I'd reconciled waterlogged ledgers for a seafood company that barely survived 3 hurricanes and a lawsuit over mislabeled clams. I knew what a clean financial trail looked like, and what it felt like when it wasn't. Lately, it hadn't been. The irregularities started small, too insignificant for anyone chasing the next big thing to notice. A dozen Uber receipts labeled as off-site lunches, but time-stamped at 10 p.m. A consulting invoice recorded 3 times under 3 different company names, all owned by a man who just happened to be the CEO's old roommate. Amazon charges for ergonomic chairs, yet no one in the office had received new seating. Just minor oddities, each one explainable if you squinted hard enough. But that's how dirt works. It doesn't announce itself.
It accumulates, layer by layer, like soot in a chimney, waiting to ignite. I brought one discrepancy to the new head of modern accounting systems, a 25-year-old with a degree in data visualization and a TikTok following for explaining taxes with
Lego figurines. He patted my shoulder and said, "Legacy systems are just afraid of change." Legacy system, that's what they called me now. Not controller, not analyst, not even Susan. Just legacy system. So I stopped trying. I stopped flagging issues. I stopped caring. If the new regime wanted ledgers full of distortions and vanishing entries, so be it. I wasn't going to exhaust myself chasing a team that believed Google Sheets and intuition could replace a full audit trail. They took away my team, my authority, even my backup login to the budgeting platform. But they didn't take my memory, and they didn't think to check the local archives. I'd kept printed ledgers, signed expense approvals, and my own private copies of vendor histories spanning 6 fiscal years. I wasn't plotting revenge. I wasn't the vengeful type. I was the exhausted type, the kind of person who triple-checks the checkers, who color-codes vacation days, and builds her own retirement calculator in Excel because the online ones round up too generously. I stayed out of the way, updated what little I was still allowed to touch, and watched as the numbers grew shinier, looser, and more unreliable. Quarterly reports became marketing brochures, not financial disclosures. Suddenly, we were optimizing cost centers and streamlining incentives, which somehow translated to giving executives bonuses based on strategic value rather than actual profit. When Travis announced the $220 million merger with a thriving AI logistics firm, the office erupted in applause. Champagne corks popped. Balloons filled the break room. Someone brought in cupcakes decorated with dollar signs. Meanwhile, I sat at my desk, staring at the email. Please direct all pre-merger accounting inquiries to our new integration specialist, Derek. Derek, the same person who once asked me in a Slack message what net of taxes meant. He'd been with the company for 5 months. I'd trained him. He'd once spilled a smoothie into the petty cash drawer and tried to dry the bills with a hairdryer in the bathroom. Now, Derek was the point of contact between us and the auditors. I wanted to scream. Instead, I updated my spreadsheets, confirmed my exit clause was still in the employee handbook, and silently watched the disaster unfold. They unveiled the announcement like it was a royal wedding. An all-staff meeting streamed in 4K with Travis grinning like a game show host on adrenaline. "We are entering a transformative partnership," he declared, his voice booming across the slick stage they'd installed in the lobby for the occasion. A $220 million merger with Centauri, an AI-driven logistics firm that's revolutionizing global movement. The crowd clapped like trained seals. I sat in the back pretending to sip my coffee while mentally calculating the legal fees a failed due diligence review would incur. The Centauri deal wasn't the issue. They were legitimate. They'd done their homework. The problem was us, or rather, the fictional version of us Travis had constructed with PowerPoint decks, press releases, and performance dashboards as rigged as a carnival game. Our books are flawless, Travis proclaimed, smiling as if he'd personally scrubbed them clean. We'll give the auditors full transparency, modern dashboards, AI-driven reporting, smart ledger systems. No more outdated practices. That last line was aimed at me. He didn't say it outright, but he didn't need to. Everyone glanced my way for a split second before turning back to applaud. By noon, a new org chart had been posted. My name wasn't on it. Instead, Merger Financial Readiness was now a bullet point under Derek's name, the smoothie assassin. His profile photo looked like a fraternity mugshot, button-down shirt too tight, hair gelled as if he were auditioning for a toothpaste commercial. I forwarded it to myself, just in case I ever needed to show a lawyer how deep the negligence ran. Derek stopped by my desk later, holding a laptop like it was a live grenade. Hey, Susan, no hard feelings. They really want to push the tech forward. Narrative, it's not your fault. You're great at legacy workflows. Legacy workflows. There it was again. I smiled, nodded, and silently wondered if his generation believed books balanced themselves through positive thinking. The next few days were a whirlwind of meetings. Not mine, of course. I wasn't invited to a single one. Derek, however, strutted past my desk daily in different colored sneakers, flanked by interns and junior staff who used to ask me where to find printer toner. They called themselves the Merger Squad. I called them the Four Horsemen of Fiscal Apocalypse. I did receive one email from Travis himself, short, polite, and condescending enough to strip paint. Susan, thanks for your years of dedicated service. As we enter this exciting new chapter, we'll be streamlining some internal processes. I know you'll support Derek as he transitions into a more visible role. Feel free to assist where needed, but let's avoid confusion by keeping clear swim lanes. Swim lanes. That's what we'd become. Not departments, not people, just chlorinated boundaries. I was a lane, one they wanted to keep hidden unless the pool caught fire. So I did nothing. I didn't argue or protest. I went to work every day, logged my hours, answered the occasional invoice question, and watched as the merger team floundered like children given a bank account and a crayon. But I observed. I saw the reporting dashboard glitch on day 2. I saw Derek's data pull return, totals that didn't match vendor receipts by 5 figures. I saw a pre-merger reimbursement report list meal expenses from 2 years ago under strategic outreach. No one noticed, or if they did, they chose to ignore it. The narrative was too polished, the bonuses too tempting, the press coverage too flattering. Derek posted a selfie with Travis in front of a whiteboard that read, 220, let's effing go. The caption, crunch time, transparency mode activated. Still, I did nothing because the numbers never lie, and the numbers were already rotting from within. I just had to wait until someone tried to serve them to adults. They arrived on a Tuesday, 4 auditors in business casual, armed with clipboards, laptops, and the kind of expressions people wear when they're about to dismantle a plane mid-flight. No announcement, no warning, just a cold draft sweeping through the accounting floor. As their team filed past Derek's desk and set up in the glass conference room, the aquarium, the atmosphere shifted. At first, Derek was all charm and confidence, guiding them through his flashy dashboards and smart recon tools. He said things like, "We're blockchain adjacent, and we've moved beyond legacy formats, as if paper trails were a myth believed only by old people, like Santa Claus or pensions." The lead auditor, a quiet, middle-aged woman named Renee, just blinked at him, not even bothering to fake a smile. She asked for raw data exports. Derek hesitated, then offered a slideshow instead. Wrong move. Within 6 hours, Renee's team had 3 sets of numbers, none of which aligned. The main ledger showed one version of January's expenses. The tax prep file showed another. The back-end database they unearthed from a buried cloud drive, a system Travis had labeled deprecated and tried to phase out, showed a third. And these weren't minor discrepancies. We're talking 5-digit differences. Meals overstated by $18,000. Hotel stays with no check-in records. Plane tickets issued to former employees, some to people who never worked here. Still, no alarms were raised, at least not publicly. Travis walked around that day with his usual manic grin, nodding at employees as if everything were fine, as if the foundation weren't crumbling behind closed doors. I watched from my desk as he cracked a joke in the hallway. Something about audit hiccups being part of the game, before disappearing into his office for 3 hours. When he finally emerged, the grin was gone. The next day, I started receiving emails from Derek's interns, carefully worded passive-aggressive messages. Hey Susan, quick question. Do you recall how vendor reimbursements were tracked in FY20? Asking for context. Hi, just wondering if you might have copies of any travel logs from Q3 2021. We're missing a few things. Do you know what code G7 means in the reimbursement tags? Derek thinks it's for group lunches, but the numbers seem off. Yes, I remembered. Code G7 was the tag I'd used for joint team meals under the 75 per person policy cap before Travis raised the limit and removed manager approvals for efficiency. That's when the abuse began. That's when team lunch became $400 sushi feasts for 2. That's when vendor meet and greet became code for a Marriott suite in Miami with 0 documentation. I didn't reply to the emails. I just printed them, quietly filed them alongside the receipts and backup ledgers I'd already saved, color-coded by month, labeled by incident. I wasn't interfering. I was documenting, as always. By Thursday, word had spread. The auditors were unhappy. Whispers filled the break room. Someone said the lead auditor had requested all meal receipts over $50 for the past 18 months. Someone else claimed they'd seen Travis arguing with the general counsel in the parking garage. Derek stopped by my desk again, this time without his laptop shield. Susan, he said, smiling too widely, I'd love to loop you in to review the old ledgers, just to cross-reference a few legacy entries. Legacy, always that word. I leaned back in my chair, met his gaze, and said, I'm sure you've got it handled. After all, you're the merger readiness lead now. He nodded, but I saw the twitch in his jaw, the same look I'd seen on interns who realized too late they'd deleted the wrong file and were trying to smile their way out of trouble. Meanwhile, inconsistencies kept piling up like unpaid parking. Tickets, travel claims with no itineraries, meal costs that spiked every time Travis flew to New York, always on weekends, always under the guise of strategic outreach. A limo charge labeled client onboarding during a period when no new clients were onboarded. And then there were the shell vendors, entities that billed us just under the quarterly review thresholds, with the same invoice styles, the same typos, different names, all routed through the same P.O. box in Delaware. None of it was conclusive, yet. But it didn't need to be. I could feel it in my bones. The tension wasn't just in the data, it was in the air. People walked quieter. The aquarium's glass walls had been covered. Auditors no longer smiled in the break room. Legal had started arriving early. No one said it aloud, but the pressure was mounting. The only question now was when the first crack would appear. By D. Monday morning, the glass doors of the aquarium were fogged from non-stop meetings and quiet panic. You could sense it, the burnt nerves, the corporate deodorant masking fear. Renee and her team had been in there for 4 days straight. Every time someone emerged, their face looked a little more haunted. The merger partner's CFO had flown, in that morning, wearing reading glasses on a chain and speaking like someone who'd seen executives reduced to tears over decimal points. Her voice carried down the hall. You don't secure a $250 million integration with shadows in your ledgers. The door closed before I could hear Travis's response, but judging by the sweat on Derek's neck afterward, it wasn't reassuring. The building had developed its own tension gradient. Near the lobby, optimism, LinkedIn smiles. Near the aquarium, hushed voices, half-empty coffee cups, printers churning out expense records like slot machines in a nightmare. Word trickled down that the audit team had hit a wall. 3 systems, none aligned. The dashboards Derek had built using AutoSync smart data were riddled with gaps and mismatches. Receipts were missing. Totals varied by $5,000, $10,000, sometimes $20,000, depending on which report you trusted. When Renee's team tried to cross-reference Q2 expenses with actual account activity, they discovered entire weeks of reconciliation marked pending sync. One of the interns put it best. It's like someone tried to build a skyscraper with spaghetti code and good vibes. And still, they didn't call me, not directly, but I could feel it in the floorboards. A junior auditor stopped me by the vending machine. "Hey, are you Susan?" I nodded. She glanced around as if we were sharing. "Classified information. Were you here when they used something called Expense Vault?" "Yes," I said, before they switched to SmartTrack. "Right. Do you know if there's any backup data?" I smiled politely. "There's always backup, if you know where to look." She blinked. I left her there with her cold trail mix and creeping dread. That afternoon, Travis held another status meeting, this time not in the lobby, but locked behind 2 doors with legal present. My phone buzzed 10 minutes later. It was Derek. "Hey, wondering if you could swing by later for some quick context on old reimbursements. Just a few anomalies. Anomalies. Cute." I didn't reply. Let him stew. That night, while the office emptied, I stayed late, not to help, just to listen. I sat in my cubicle with the lights dimmed, finalizing my own monthly reports, because someone still had to do the real work, and overheard Travis pacing outside the aquarium. "She's not on the project anymore," he hissed. A pause. Then a woman's voice, calm and deliberate. "Be that as it may, she's the only one who's been here longer than the dysfunction." Another voice joined in, male and nervous. "I think we need to loop her in, just to close some gaps. She might know where the older approvals are." I leaned back, crossed my arms, and stared at the flickering cursor on my screen. My name was on the table now, passed around like the last good flashlight in a blackout. Not because they respected me, not because they wanted me back, but because their parachutes were tangled, and they were realizing too late that the only person who knew where the real exits were had been demoted to a filing cabinet. I didn't feel triumphant. I felt ready. I'd spent weeks watching the cracks spread beneath their shiny merger spectacle. I knew every fudged number, every shortcut. I had copies of the pre-policy travel sheets, vendor reconciliation logs, from before Travis started dismantling approval chains. Even the old email trail from when I'd warned about the risk of duplicate invoices. They'd buried those warnings under buzzwords and champagne. I'd kept the evidence clean. When the first urgent calendar invite arrived, simply sync, Susan, I didn't panic. I didn't ask what it was about. I accepted. They weren't calling in the cavalry because they valued me. They were calling because their house was on fire, and they'd just realized the only person with a fire extinguisher had been sitting in the corner the whole time. They made me wait. Not long, just enough to remind me this was their show, and I was a last-minute understudy handed a blood-stained script. The invite said 10 a.m., but it was 10:26 when Derek finally opened the aquarium door and said, with the forced brightness of someone mid-colonoscopy, "Susan, so glad you could make it." Inside, the war room reeked of coffee, stress, and that sterile, fearful sweat you can't Febreze away. Travis stood near the head of the table, sleeves rolled up as if he were one spreadsheet away from solving world hunger. His eyes avoided mine, too busy gauging the reactions of the 5 auditors across the table, 3 of whom looked like they'd aged a decade in a week. Legal was in the corner, typing furiously. Renee sat in the center, arms crossed, watching. Me the way a hunter watches a rustling bush. Travis cleared his throat. "Susan," he began, putting far too much effort into sounding casual. "We thought it might be helpful to get your perspective, given your long history with our systems." I nodded once, neutral. He gestured to the chair beside Renee. "Think of this as a chance to vindicate some of those traditional workflows of yours." There it was, framed like an invitation, draped in condescension, as if he were tossing a dog a treat and calling it a steak. I sat without a word, pulled out my glasses, and opened my leather-bound notebook. The thud it made on the table was satisfying. "I'll need raw access," I said calmly, Full expense logs, not dashboards, no summaries. The source exports, line by line. Renee nodded once and slid a flash drive across the table, already extracted from both SmartTrack and Expense. Vault, you'll find discrepancies. I'm counting on it, I replied, plugging it into the laptop. Derek reluctantly surrendered. They all watched me, as if I were about to perform surgery on a patient they'd already declared dead. The files opened with a hiss of mismatched data. Misaligned headers, misdated entries, vendor names riddled with typos. I scrolled slowly, letting the noise fade into background hum. Derek started fidgeting after the first minute. Travis kept checking his phone as if a lifeboat might text him. I spotted it within 6 scrolls. The same vendor, Luxent GRP LLC, billed 5 times in 3 weeks, each time under a slightly different name. Lux Group, Luxent GRP, Luxent Group LLC, Luxent GRP, and my personal favorite, just Luxent. All just under the $10,000 threshold requiring second-level approval. All coded under strategic outreach. No receipts, no calendar invites, no expense notes, no clients. I kept scrolling. Team meal charges at Morton's Steakhouse on Saturday. 6 people listed, but only 2 had actually checked into the office that weekend, according to the keycard logs I still had from last year. A travel expense, a San Francisco recon trip, but the flight was one way to Cabo. No return ticket, no meeting agenda, no attendees, no follow-up. This wasn't sloppy. It was calculated. And Travis, for all his bluster, didn't have the nerve to ask where the bodies were buried. I looked up after 15 minutes of silence. Do you want this cleaned up or exposed? I asked, my voice dry. Renee blinked. What's the difference? Cleaning it up means I give you the patterns, the gaps, the routing mismatches, and you patch the holes before your partner walks away. Exposing. It means I give you a full breakdown, cross-referenced with personal benefit logs. And then I turn to legal. You start prepping for regulatory disclosure. Travis made a noise halfway between a cough and a whimper. That's dramatic, he said. No, I replied, scrolling again. What's dramatic is hiding personal trips to Aruba under vendor relations, while billing the company for meal reimbursements in 3 states simultaneously. Renee raised an eyebrow. You found that in 15 minutes? No, I said, closing the laptop. I found it 3 months ago. I just wasn't paid to care. The room fell silent except for the quiet tapping of the lawyer's keyboard, now moving much faster. I folded my hands on the table and looked at Travis. This is your show, but you brought the wrong understudy and the wrong script. No one moved, not even Derek. I gave them controlled confidence, almost boredom, because the fun was just beginning. Didn't need hours. I needed silence and access. 2 things they'd denied me for months. Now that I had both, the patterns lit up like heat signatures. The trick was always in the timing. Corporate fraud isn't usually about glaring red flags. It's about repetition, predictable, lazy repetition dressed up as efficiency. And Travis, for all his talk of strategy and innovation, had the imagination of a beige sofa. The first cluster appeared like a bruise under fluorescent light. 4 transactions logged as client lunch Q1 planning, spread across 3 days, all from the same restaurant, all for $9,642. Different departments listed, product, biz dev, even IT once, but the cardholder's name was always the same, someone in Travis's inner circle, someone whose name also appeared on a now-defunct innovation task force that hadn't met since 2022, $9,640, 4 times. That number wasn't random. It was 058 under our individual meal cap. No manager approval required, no notes, no red flags unless you knew where to look. Unless you remembered that this restaurant didn't do individual bills, and they certainly didn't serve Q1 planning lasagna. Check the lunch receipts, I said softly. Too softly, maybe. Renee's pen paused mid-stroke. What? I repeated it. Check the lunch receipts. Specifically the ones between January 12th and February 5th. Look at the dollar amounts. Renee glanced at one of her analysts, who was already clicking through folders like a caffeinated squirrel. A few keystrokes later, she muttered, They're all between $95 and $99. Almost none go over $100. That's by design, I said. Our policy auto-flags anything above $100 for director review, but under that, it just logs and clears. especially if the submitter tags it with a green light. Project code, which funnily enough most of these do. I stood, walked to the whiteboard and picked up a marker. On one side I wrote claimed meal dates. On the other, actual card activity. Then I pulled out my own folder, printed cross-references from our old ledger system, the one they deprecated but hadn't scrubbed from the card logs. There's a real charge for every claim, but not all of them match. Some were rounded, some were split, some don't even belong to us. Renee's analyst chimed in. This one's from a card belonging to a vendor who isn't in the employee database. Exactly, I said. They used third-party vendors with company cards to push through meal claims. Same restaurants, same days, sometimes the same table, just under different names. The room's temperature seemed to drop. Derek looked like he might be sick. Travis's foot started tapping. Small at first, then frantic, as if his brain were running from something his mouth hadn't caught up to. Renee leaned forward, her voice suddenly sharp. These charges aren't just inflated. They're coordinated. They're layered, I said. Designed to stay invisible unless you align the timestamps, vendor logs, and expense policy thresholds, which no one would do unless they were, say, actually auditing something, or they'd been watching it build for a year. I looked directly at Travis. He didn't blink. These aren't team lunches, I continued. They're expense laundering, shell reimbursements, pocket bonuses. I haven't even touched the travel logs yet, but if you like Cabo, you're going to love what's in Q3. Renee's team was in motion, now cross-checking receipts, pulling credit logs, dragging data into comparison matrices. Travis finally spoke, but his voice cracked. It's not fraud. These were approved business activities. Sure, I said. If your business was dining alone at steakhouses on Saturdays in different time zones, 3 times a day. I got a stifled laugh from Renee's assistant. She covered it quickly. I closed the laptop and folded my arms. I'm not here to debate ethics. But if you want to know what's verifiable, there's enough here to sink the merger, or at least delay it long enough for Centauri to walk away. And if they ask why, I'll point them to the receipts. Renee didn't smile, but her fingers stopped, moving. She was looking at me now. Really looking. What do you want from us? She asked. I paused just long enough to let it linger like the scent of something burning. I want you to finish the math, I said. Because I already did. I'm just here to watch them read it. Renee's team fell silent. No more typing, no more hushed conversations, just the hum of fluorescent lights and the occasional creak of a chair, under too much weight, the kind of silence that makes your skin prickle. Elliot, the lead auditor, a soft-spoken man with salt-and-pepper hair and the perpetual expression of someone who'd spent too many years reading the fine print of human failure, hadn't said a word for nearly 20 minutes. He sat at the corner of the table with a stack of printouts, receipts, vendor summaries, and one of those calculator watches only true masochists wear unironically. I saw the moment it clicked for him, a blink, then 2. Then he reached into his coat pocket, not for his laptop or notepad, but for a napkin, a real napkin, beige from the cafeteria. He smoothed it out beside his laptop, pulled a pen from behind his ear, and began scribbling numbers, dates, deductions, thresholds, arrows connecting shell entity aliases to specific meals, travel claims, and consulting payments. No drama, no grand gestures, just deliberate, unflinching math. The kind you do when you realize you're not auditing a company. You're performing an autopsy on it. Everyone watched except Travis, who was pacing. His tie was gone, his collar unbuttoned. He kept muttering under his breath, "This is overblown." We already cleared the preliminary checks, my personal favorite. There's no intent here, as if intent were the line between sloppy bookkeeping and criminal fraud. Elliot finished his notes, capped his pen, and stared at the napkin for 5 full seconds. Then he pushed his chair back just enough to put distance between himself and what he'd written, and slid the napkin down the table toward Travis like a lit fuse. Travis froze. He didn't reach for it immediately. He stared at it as if it might bite. Then, slowly, he stepped forward and read it. His eyes twitched left to right, as if trying to read and unsee what was in front of him. His hand rose slightly, trembling at the wrist. A tiny motion, barely perceptible, but as loud, as thunder in that silent room. The number was written in blue ink, circled 3 times with a single word underneath. Exposure. Renee spoke softly, almost kindly. This amount, if not properly disclosed as executive compensation or business liability, becomes taxable and criminally falsified if filed as deductible under shell vendors. She looked at legal, who was no longer typing, just staring at the napkin as if it were written in blood. We're not talking about a footnote, she added. This changes the entire balance sheet. It corrupts the EBITDA, poisons the M&A valuation model, and qualifies as willful concealment if the shell entities are tied to anyone in leadership. Derek coughed. No one looked at him. He was already fading into the background. Travis opened his mouth, but nothing came out, just air, dry and breathless, smelling like someone who'd finally realized the lifeboat he was clinging to had a hole, and he'd made it himself. I didn't say a word, didn't smile, didn't gloat. I just watched. That napkin was the funeral program for his merger. All his buzzwords, all his dashboards, all his posturing, undone by catered steak lunches, and a pattern of laziness so arrogant it thought math wouldn't notice. He finally whispered, "Can this be fixed?" Elliot didn't answer. Neither did Renee. Instead, she turned to me. "Did you track this over time?" I nodded. 16 months. Every flagged charge, every PO box, every itinerary mismatch. She nodded once. "Your documentation, it's in triplicate?" "Yes," I said. For the first time since I'd walked into that room, Travis turned to me, eyes wide, desperate. "Why didn't you say something?" "I did," I replied. "You called it resistance to innovation." The room's temperature dropped another 5 degrees. Outside, the merger team, the interns, the coordinators, the strategic advisors milled in the hallway, blissfully unaware of the iceberg their captain had steered them into. Inside, the silence cracked, not with shouting, but with realization. The audit wasn't just failing, it had already failed. All that was left now was the fallout. I wasn't aware those shell companies were still active, Travis stammered, one hand gripping the back of a chair as if it were the only thing keeping him upright. They were supposed to be dissolved last year. That's what legal said. But legal wasn't saying much now. They were whispering urgently, heads bent over a shared screen, eyes darting between the napkin math and the real-world consequences. One typed, while the other muttered phrases that made even the air seem to hold its breath. Material misrepresentation. Section 302, liability. Retroactive exposure. Someone mentioned whistleblower clauses. Another said SEC mandatory disclosure, as if the words tasted like battery acid. Renee stood. "We're halting our portion of the audit." Her voice was calm, but unyielding. "This goes far beyond reconciliation. We'll be submitting a preliminary findings report to our client's general counsel and recommending an independent forensic analysis." Travis opened his mouth, closed it, swallowed something invisible. "You don't have to do that. We can fix this internally, run a cleanup, reclassify the expenses." Elliot cut him off, still seated, still staring at the napkin as if it had personally offended him. "We don't clean messes," he said. "We document them." Across the room, Derek looked like he wanted to crawl into the ventilation system and never come out. I watched him pick up his phone, hesitate, then put it back down. The others, the junior execs, the firm's freshly minted VP of strategy, sat frozen like children at a dinner table where the adults had started yelling. And me, I started packing my things. No drama, no grand exit. Just unplugged the borrowed laptop, closed my leather notebook, and slid everything into my bag. My work here was done. They didn't need me for the implosion. They had lawyers for that, and crisis PR, and the now inevitable email to Centiore's executive team explaining why due diligence had suddenly hit a technical pause. Behind me, Renee began outlining next steps, her voice low but clear. Travis sat down hard, staring at the floor. The hand that had once waved away audits and policy controls now trembled just trying to hold a pen. I caught one last glimpse of the napkin, creased, smudged, but unmistakable in its brutality. The number circled on it represented more than money. It was exposure, consequence, proof that arrogance has a price, and paper trails are patient. "Wait," Travis croaked as I reached the door. I turned slightly. He looked at me like a man finally realizing the fire was real and the extinguisher he'd mocked was already halfway out the building. "You're just going to leave." "I was never invited," I said, and I meant it. They hadn't wanted my eyes on their numbers, my voice in their meetings, my experience on their team. They'd wanted a story, sleek, clean, futuristic. They'd gotten receipts instead. I stepped into the hallway. The light was brighter out here, clearer. Interns avoided eye contact. Phones buzzed in pockets. No one dared answer from the aquarium. I could still hear the murmurs: restatement risk, criminal exposure, disclosure deadline. My heels clicked softly on the tile as I walked back to my desk. I moved slowly, not because I was savoring it, though maybe I was, but because there was no rush. Let them burn. I'd already packed my parachute. I was halfway to the parking garage when I heard my name echo off the concrete. Fast footsteps. Behind me, heels too expensive to be HR, too frantic to be PR. It was Marcy, the company counsel, usually composed, always unreadable. But now, her hairline was damp, her breath shallow, a legal pad clutched to her chest like a defibrillator. "Susan," she said, catching up, the kind of false smile you wear when you're bleeding in a courtroom but still trying to shake hands. "Wait, just 1 second." I stopped. Let her sweat. She shifted awkwardly, papers in hand. "I know things." Escalated. That was one word for it. She inhaled as if about to ask me to forgive a war crime. "Listen, legal, that is we, reviewed the merger prep documents and realized your prior role was technically listed in the transitional continuity clause." I said nothing, just tilted my head. "Let her keep digging, which means," she continued, "you're contractually pre-cleared as a consultant in the event of data instability during due diligence." "And you're experiencing data instability," I said, as if describing the weather. Marcy nodded slowly, carefully. "The audit team has flagged your reports as the only verifiable accounting framework predating the inconsistencies. If we want any chance of salvaging this merger, hell, even buying time, we'll need you to walk the Centaur compliance team through your version of the books." I let that hang in the air. She added quickly, "Of course, compensation will be adjusted." "How adjusted?" "A 12-month engagement, triple your previous salary, full autonomy, no reporting line to Travis, and a retroactive NDA buyout for your original termination clause." There, it was. The world flipping over in a single breath. I nodded slowly. "I'll need it in writing." "It's already drafted," she said, holding out a manila envelope as if it might burn her fingers. "Signable by end of day." I took it. No smile, no handshake. Just quiet practice control. Back inside, the aquarium was now a pressure cooker. Renee's team was packing boxes of flagged documents and exported logs. Travis stood by the whiteboard, no longer talking, just staring. The napkin still gripped in one white-knuckled hand, the blue ink circle now faintly smudged by his sweat. He didn't see me walk back in, didn't notice as I passed the interns, who were now whispering things like resignation package and SEC contact escalation. I took a seat in an empty conference room 2 doors down, opened the envelope, and read the terms. Every line, every clause, every comma. Standard consulting protections, indemnity, payout guarantees, direct liaison to Centaur's CFO, autonomy, respect. The kind of deal I'd spent my career being told I wasn't bold enough to ask for. Signed with my own pen. And as I stood to leave, contract in hand, bag over my shoulder, I paused just long enough to glance through the aquarium glass. Travis hadn't moved, still holding the napkin, still staring at the number as if willing it to shrink, but it wouldn't. It would sit there, ink, paper, truth, long after the press releases were pulled and the interns found new jobs. And me? I walked out. Not with revenge, not with rage, but with receipts and a contract ensuring they'd pay for every single one.